Hi guys, I'm Ben the broker with Compass. Today we're going to touch on how to choose a lender. So there's a lot of real estate agents, there's a lot of lenders out there, and it's confusing to know who you want to work with, who's in your best interest, who's going to get you the deal, which is a priority, and who's going to save you the most money with the least amount of time and the least amount of stress. So things to look for in a lender, uh, obviously reading online reviews, Google, Yelp, Zillow. Uh, there might even be some lender websites to go to specifically to read reviews like there are for real estate agents. And then of course asking your friends and family who had a good experience. They can send you an introduction email, warm handoff, and of course ask your agent broker for their recommendations as well. So, the people that we recommend are people those are the people I'm going to contact when I'm actually buying my next primary residence or my next investment property. So we're not getting kickbacks from anyone. We're sending you genuinely who is in your best interest as if we were the principal completing the transaction. And that's the way any professional should be helping you. It's called a fiduciary, which means they're acting in your best interest at all times. So you want to ask that loan officer what loan products, options, programs they have for you. There's fixed rate loans. The two major fixed rate loans are a 15-year and a 30-year. And with a 15-year, you'll actually have a lower interest rate because you're going to pay it off faster. So your monthly payment is substantially higher. And then there's a 30-year fixed rate. And the United States is really, really fortunate to have that fixed rate loan for 30 years amortized over the full 30 years because you have the lowest monthly payment. And that allows buyers to really probably afford more than they normally could. But the United States government, the IRS, and the bank is willing to go into business with you to buy a home. And there's very few, if any, other industries that have the kind of financial subsidies that real estate has, and that's just one of the many things we love about it. So an ARM stands for adjustable rate mortgage. Normally you're going to see a 5-1 ARM, which means it's fixed for the first 5 years and then it adjusts every year after. You'll see a 7-1 ARM, which means it's fixed for 7 years and then it adjusts. And a 10-1 ARM. Those are the most customary. I have seen some more independent brokers who are offering a 3-1 ARM. And then there's also an interest-only loan. So an amortized loan, you're going to be paying principal and you're going to be paying mortgage. So at the end of that term, you actually own that property free and clear. You've paid off all the principal on the property. An interest-only loan, you're only paying interest. You're not paying down any of the principal, so your payment is lower. But that is a good option for some people where they can actually make more money investing that principal in other places, whether that's their business, the stock market, real estate development opportunities, lending. And so a lot of high net worth individuals actually like to go for those more aggressive ARMs, and also the interest-only product. It allows them to have a lot more cash flow for their lifestyle and investments. And then you have a bridge loan, which is a temporary loan as you're adjusting from your primary residence to your future home. And then you sell your departing residence and you refinance that bridge loan into a conventional permanent loan. Normally you're seeing a higher interest rate there, but you have a goal in mind. We're trying to get you into that next property without the contingency of selling your home, which is going to make your offer less attractive to the seller. And if it's a really nice home, which we like to help our clients buy, there's probably going to be multiple offers. So we have to do things to stand apart from the crowd if we're going to stand out from the rest. And then as far as price goes on a loan, there's two components of that. The first is the interest rate. And then the second is the points. So some lenders don't have any points. Some lenders will charge points. Normally when you're going for a bridge loan, there are points involved. I just had a buyer get one estimate from one lender with 2 points at 6% interest, and then they went to First Republic Bank and got 3.65% interest rate with half a point. So substantial savings there when you're working with the right professionals, and we made that introduction to that loan officer at First Republic. And then the speed to close the transaction on a bridge loan, you can normally close as quickly as 10, 14 days. There are some lenders who are going to be able to close in 14 days, other lenders who are going to close in 30 days. That is an important component in deciding who to select as your lender. And then how quickly they can approve the appraisal, I'd say customary right now is around 10 days. Some lenders take longer, could be 17 days. And then you have the loan approval. So if you're working with a lender like, say, First Republic Bank, Wells Fargo, they're actually going to underwrite you up front. And with Wells Fargo, you need to ask for a underwriter credit approval letter. And they send all your documents to the back office, the underwriter reviewing your credit, income, assets, tax documents, pay slips, your credit, and they will say you're approved up to X purchase price. And when you're fully approved like that, you can make an offer with no loan contingency, which allows you to compete with other buyers who are doing the same, or all cash offers. So this is really important. You want to go with a lender who can give you that underwriter approval, and that is actually, in this competitive market, that's more important than going with the lender who's going to give you the least expensive rate. And so ideally the goal is to find the lender who has excellent service, because we're service first, low rate, 0 to low points. We'll close escrow as fast as possible. We'll approve your appraisal in 7 to 10 days, and we'll have already provided you underwriter mortgage credit approval so you can make an offer with no loan contingency. And then the last piece of the puzzle is just having that loan officer go kind of one step above the norm and really reach out to that listing agent, whether it's a phone call, email, let them know, hey, I'm helping so-and-so buy a house. I've reviewed all their income, assets, their credit. I've been working with them for X amount of time. They're so excited about this home. We'd love an opportunity to work with you. If there's anything you need, I'm available by phone, email, and text. And then, of course, making sure that that loan officer is telling that buyer to get underwriter credit approval if they just have a basic pre-approval letter. Because with a basic pre-approval letter, you're still going to have somewhere between a 10 to 21 day loan contingency, which really is not that competitive if you're competing on a property with multiple offers. So this is, in a nutshell, what to look for in a lender. Feel free to reach out to me if you guys have any questions, ben.faber@compass.com. And we're really excited for this spring market. Take care.